As I turned to you, you smiled at me. How could we say no? Oh, the fun to have, to live the dreams we always had. Oh, the songs to sing when we at last return again. Slapping your big glancing kiss to those who claim they know the streets that seem and his. The devil's in his hole. Oh, to sail away, sandy lands and other days. Oh, to touch the dream, eyes inside never seen, yeah. When the mighty ones rise, oh, the heavens from the
Welcome, Bitcoin friends. It's Bitcoin Mamo. Today we're going to look at the Bitcoin charts, do some TA, we'll look at various time frames, and we'll also take a look at market Cipher. So we're going to start here on the 2-week time frame for Bitcoin. The previous video was about 2 weeks ago, and we were hovering around 28k. And in that video, we did mention I expected a pullback to come soon, and we have seen Bitcoin go down as low as 25.9k. Currently, we're sitting around 27k. And we mentioned this trend line here, just connecting at this initial high in the bull run and also this high. And even though we broke above it, I thought this was still a relevant trend line. And we were starting to interact with that trend line on this initial run from the bear market low. We have been getting resistance here for 3 2-week candles. I think this is the key trend line that we need to break to get continuation to the upside. And just zooming in on that area, we do also have a trend line here connecting at the 2 lows. I think we possibly spend some time going towards this wedge here until we do see a breakout. We were also looking at some possible targets over the previous videos, and we were looking at fib levels. So taking it from the overall bear market low to the high, we saw that the 382 level was at around 25.2k and the 0.5 level down at 23.2k. And we also took the fibs from this low here after this pullback to the high. We did see a bit of confluence with these fib levels, the 0.5 fib lining up with that 0.382 fib, and the golden pocket in a similar area to that 0.5 fib. So these were two targets I was looking at here, and I mentioned I think we probably come down to around 25k. This was also the tops here of both of these moves before we saw these pullbacks, and it seemed like a logical level in line with these fibs. We did get down to 25.9k, so we did get quite close to that 25.2k target. And perhaps we do still come down and meet that target. At the moment, there's no clear signs on which direction we're heading here. This could be the low of the pullback already, as we have seen buying come in here when we have dropped down to these levels. So I am open to both options here, although I think anything under 27k is a good area to buy here, and even look for a long position on low leverage. And by low leverage, I mean something like 5 times leverage. So putting on a trade at 27k would put your liquidation point down at 21.6k, and I think that's rather a safe trade. And switching down to the weekly time frame now, we have those same trend lines drawn in and the fib levels. We do see how even on the weekly, it seems like this trend line is keeping the price down. Looking at the weekly stochastic RSI has been cooling off here, as we have been in this weekly downtrend now for about 5 or 6 weeks. So I think this needs to cool off completely here before we start moving back to the upside. And this can mean just going sideways here and even possibly down to that 25k level. I think we just need to spend several more weeks in this area until we do see a turnaround and a move back to the upside. And there's a couple of ways we can look at this pattern coming off these lows. We can obviously look at this trend line connecting the lows, but we could also draw in this parallel channel here connecting the highs here and also this low. And we do see it does look like we have come back to the bottom of this channel. So there are a couple of ways to interpret this price movement. If we do look at it this way, then perhaps this pullback has already finished. We might see that move to the upside sooner, sometime over the next 2 or 3 weeks. But we'll have to see how that plays out and look at some of the more smaller term timeframes to see if we can get more of an idea of what's going to happen. The other thing we can look at is the Bollinger Bands here. For those that don't know, with the Bollinger Bands, price tends to spend at least 90% of the time between these bands. Once we do go outside those bands, it becomes more likely that we will re-enter them. And the midline here in blue is actually the 20-week moving average. And this is an important average here. We can see on this previous pullback, we pretty much came to that 20-week moving average and then got the bounce. And currently we are quite close to that moving average. It's currently at 25.2k, which is also the tops of these previous runs here. And of course, on next week's open, this would be a little bit higher, perhaps at 25.5k. So perhaps we need to touch this 20-week moving average first before we see a bounce. We can also go back to the 2014-15 bear market, and coming out of that bear market low here, we can see we had an initial run here, and we pretty much pulled back to the midline, that 20-week moving average. We did wick lower, but the candle bodies did get support of this 20-week moving average. Once these Bollinger Bands did squeeze, that indicates more volatility is on the way. And then we did have that second big move to the upside. And then on the next pullback, we also came back to around that 20-week moving average. Once the Bollinger Band squeezed, we made the next move higher. So we can see these Bollinger Bands are starting to come together a bit more. It would take a few more weeks before the squeeze comes more significant. So perhaps we just spend some time here going sideways for a few more weeks, touch that 20-week moving average, the midline of the Bollinger Bands. Well, these do start to squeeze, and then we see that more volatile move back to the upside. And going down to the daily time frame now, we've got the same trend lines drawn in. We've also got this trend line just connecting the overall lows and this possible channel pattern here. And we can see on the daily, we did pretty much come down to the bottom of this channel and touch it here. And we did get quite a nice bounce from around 25.8k back up to 26.8k. And this was all within the 1 day. So there was some support down here. So let's see if this trend line can continue to hold as support here. And we do also have a channel on the way down here, just drawn in blue. And again, this is a parallel channel, just connecting the highs and lining up this low. We do see that we did also come to the bottom of this channel. We did go slightly lower, but it does look like we are in this channel. And we also see we got resistance here off the midline on this attempt to break higher. So if this yellow trend line can act as support and we can break through this midline. If we do break below this yellow trend line, which is this overall channel here, then perhaps we come back down to the blue trend line with this smaller channel, and perhaps this isn't the valid pattern, and we just need to look at connecting the overall lows and keep that possibility alive that we do come down further to touch this overall trend line connecting the lows here. One thing we were watching on the RSI is we did notice a trend line. If we did connect the overall lows here, we've had several touches on this trend line, and we thought perhaps we need to come down to this trend line to touch it again to complete this downside move. We haven't quite done that yet. We have gotten close, but perhaps if we did come back down, perhaps to this 25K level here, which was the tops of both of these runs, also that 382 fib from the overall low and the 0.5 fib from this low to the same high. So perhaps we do need to come down to that level there at around 25K, also the bottom of this blue channel, and perhaps that would take us down to this trend line on the daily chart. If we look at the daily EMA ribbon here, just looking at this blue channel, can see it did act as support on this pullback. We battled with it for a bit, and then we did close a daily candle below it. We had this bigger drop down, and then we did get resistance on trying to come back into this ribbon. We do see it's trying to flip here with the yellow smaller moving average going below the red larger moving average. And if this does flip, then it is more likely to act as resistance if we do come back to test that ribbon. So that's another thing to look out for. The top of the ribbon's at 27.9K. If we can close back above the ribbon, that would give more confidence that we are going to move back to the upside. Again, we'll have to let this play out day by day here. We could also go down to the 4-hour time frame here. We have that same downward channel that we're in. But one thing that was interesting, looking at the RSI, it does seem like we're squeezing here in this triangle. Had several touches on the top and the bottom here. And we are pretty much in the middle of this triangle here. And this triangle does go all the way until the end of June. But typically with these triangle patterns, we break out about 3/4 of the way through, which would be towards the end of the month. But we'll have to see how that plays out. Looking at this initial run here from the low at 25.8K, we did get all the way up to 27.6K. Now we have had this pullback. We did pretty much get close to that golden pocket area, which was at 26.5K. So this was a decent pullback on this move, and perhaps this was the second higher low, and we're going to see continuation to the upside here. And going back to the weekly time frame, one thing that we did miss talking about here, we do have the 200-week moving average, which we did pull back to and get this bounce. And of course, in previous bear markets, this 200-week moving average was a support at the bottom of the bear markets. So it is a very significant moving average. Also in the 2014-15 bear market, this was pretty much the lower support. On this occasion, we did go below it and spend significant time below it. But we have gotten back above it, and perhaps now it's going to start acting as support. Previously, it was resistance here. We can also look at the weekly EMA ribbon. And we did mention once we do start bull markets and we get above this ribbon, and it does flip with the yellow smaller moving average going above the larger red moving average, we tend to hold this ribbon all the way up in the bull run. And we can show you an example of that if we go back to the 2016-17 bull run here, coming out of the bear market low. Got resistance off the ribbon here. Once we got above it, these pullbacks acted as support all the way up in the bull run till we reach the bull run peak. So we could be doing something similar. Our current cycle does look similar to coming out of the bottom of the 2014-15 bear market. We got a nice rally above the ribbon. It wasn't quite fully twisted here with the yellow moving to the upside. On this pullback, we got support of the ribbon. Once it's flipped, it's more confident that it acts as support. And we saw that on this pullback and these pullbacks. And in previous videos, we were comparing this pullback to our current pullback. And we can see with our current pullback, we did wick into the ribbon and the bottom of the ribbon was at 24.9K. The yellow moving average is at around 25.6K. You can see it's going to take maybe 3 more weeks here before it moves to the top of the ribbon. So that's also something in favor of this area acting as support and us only going as low as around that 25.2K area, which was the tops of both of these runs, and the 0.5 fib and the 0.382 fib. That's why I think possibly this was the bottom, or we do have one more pullback to that 25.2K area. But I do think that this ribbon most likely holds here. We spend some time in this area, and then eventually we break this downward sloping trend line, and we have another move to the upside. But going down to a market cipher now, we're starting on the daily time frame. And we can see on this pullback here, we have gotten a green dot. It is in the lower area, which is more significant than these higher green dots. We did get that green dot on the 15th of May on Monday, has been confirmed. The 2-day time frame doesn't have a green dot yet. It is getting quite close. The next candle will be on Friday. Perhaps this takes a couple more candles as we get towards the end of the week and gets confirmed early next week. We saw that last 2-day green dot did indicate the end of this pullback and the start of the next run. If we look back to the 2014 to 15 bear market here, as this one does seem similar to our current start of the bull run coming out of that bear market. And this is where I thought we were in our current cycle, somewhere around here. If you remember, we spoke about that 9-day red dot getting confirmed. That was in this area here. We said once we get that confirmed, there would be a decent pullback and a more prolonged consolidation. But we can see we did get a 2-day green dot here. It's in a similar area to our current one. Once we got that 2-day green dot and it got confirmed, it showed that the bottom was in here and we did have a nice move back to the upside, even though we did spend quite a long time going sideways before we saw that bigger move to the upside. Just to show you that 9-day red dot again, we're on the 9-day time frame. That red dot appeared on the 28th of April. I said once it's confirmed, which was the 7th of May, then I think we have a decent pullback and a more prolonged consolidation or pullback in this area, just like we did coming out of the 2014-15 bear market. We got that red 9-day green dot here. It was confirmed here. Then we had a decent pullback and more prolonged time spent consolidating. So that did indicate the top of this run here and also on this occasion. We see how similar they are here. Pretty much all green candles with one red candle in between, similar to this run, one red candle in between, looking at the Heikin-Noshi candles. But I think for the recovery back to the upside and showing us the lowers in, we can look at the smaller term time frames for that 2-day green dot. And again, coming out of that 2014-15 bear market, we saw that red 9-day green dot was in this area. We had that bigger pullback. And once we got the green dot on the 2-day time frame, it showed that bottom was in and we did move back to the upside and just consolidated here for a while. And we did see that was a 25% pullback from the high here down to the low. And currently we have had a 17% pullback from that high. Coming out of that 2014-15 bear market, this was actually a 200% move to the top here. And then we had a 25% pullback. Well, with our current run here and pullback, this was actually a 100% move, so not quite as big, and the pullback is 17% rather than 26%, so we don't expect as big of a pullback as we didn't have as big of a run to the upside. So I do think it's possible the bottom is in here, or we sweep for one more low going down to that 25.2K area. But that's about all for now. Hope you enjoyed that analysis. I'm Bitcoin Mamo. I'll see you next time. Bye.